So for those of you that haven't seen the news, the new budget has just been announced. And one of the big things in it was the capital gain inclusion rate increasing. And for the majority of Canadians, it's not going to have much of an impact because what they've done is they haven't actually changed the capital gain inclusion rate or the tax rate on realized capital gains on every dollar, but rather they've done it on a graduated amount. So what I mean by that is the first $250,000 of realized capital gains that we as individuals on the personal side trigger in a year, we pay tax at the normal tax rate of 50-50, meaning half of the money that you receive is tax-free and the other half you pay tax at your marginal tax rate. Where the difference happens now on the personal side is if the capital gain is greater than $250. So let's say you have a $300,000 capital gain, that extra $50,000 above $250 will be taxed 2/3 and 1/3. Okay. So again, you have to have a fairly significant transaction to actually be in that situation. Now, for a lot of folks, you may say it doesn't apply to me. Well, if you have a second property, maybe it's a cottage, maybe it's just a rental property, and you've owned it for a number of years, if you sell that in the future, you would likely be in that situation. Okay, so that's number one. Number two, if you happen to have a corporation, so again, maybe you were incorporated, you've actually invested in the corporation over years, you have an investment portfolio, or you happen to have a trust, maybe it's a family trust or what have you. Well, unlike the personal where it's the first $250 is the same, on the incorporated or the corporate accounts and the trust accounts, it's on the very first dollar of realized capital gains, it's now 2/3, 1/3. So for anybody that's in that situation that has either of those two types of accounts, you're going to be paying more tax to the tune of about an extra 10% per year. Okay. Now this is going to take effect at the end of June. So for a lot of Canadians that do fall into that category, there's going to be an opportunity for some proactive tax planning. So maybe you might want to consider triggering some gains a little bit early. Maybe you're sitting on some positions that you've been waffling on that perhaps maybe you want to sell now and maybe redeploy into your portfolio. For those of you that have a second property, whether it's in the corporation or maybe it's personally, again, if you've been sitting on the fence, maybe thinking about selling, again, you might want to give some consideration. If you have questions, please feel free to reach out. I'd be happy to provide a few comments.